there is no single investment that is suitable for every investor. This is due to the fact that investors have varying risk appetites, objectives, and risk tolerance. Fortunately, the investment landscape is diverse enough to offer a variety of options for any investor. Many Americans have suffered financial hardship as a result of the coronavirus pandemic, but many more have benefited from a flood of stimulus money distributed by the US government. Many Americans now have investable funds in their bank accounts as a result of direct stimulus payments, enhanced unemployment benefits, and other distributions, not to mention tax refunds. Regardless of where you stand on the investment spectrum, there are likely a few investments on this list that would be a good fit for you. Before committing any of your capital to new investments, always consult with a financial advisor to ensure that they are appropriate for your personal financial situation. Today, we'll discuss the top 5 investments of all time. Make sure to hit the like button, and subscribe to our YouTube channel for more videos in the future. Number 5. Gold. Having gold in the form of jewelry comes with its own set of concerns, such as safety and cost. Then there are fee-making charges, which typically range from 6% to 14% of the gold price, and may go as high as 25% in case of special designs. There is still time to purchase gold coins for those who are interested. Nowadays, many banks sell gold coins. Paper gold is a different way of owning gold. Paper gold is more cost-effective to invest in, and can be done through gold ETFs. With gold as the underlying asset, such investment, buying and selling, takes place on a stock exchange, NSE or BSE. Another way to own paper gold is to invest in sovereign gold bonds. Gold mutual funds are another option for investors. Number 4. Peer-to-peer, P2P, lending. Peer-to-peer lending is a type of direct lending in which money is loaned directly to individuals or businesses without the involvement of a traditional financial institution. P2P lending is typically done through online platforms that connect potential borrowers with lenders. Secured and unsecured loans are available through peer-to-peer lending. However, the majority of P2P loans are unsecured personal loans. Secured loans are uncommon in the industry, and they are usually backed by high-end items. Peer-to-peer lending is regarded as an alternative source of financing due to its distinct characteristics. Peer-to-peer lending is a relatively simple process. All transactions are completed on a specialized online platform. The following steps outline the general P2P lending process. A potential borrower fills out an online application on a peer-to-peer lending platform in order to obtain a loan. The platform evaluates the application and determines the applicant's risk and credit rating. The appropriate interest rate is then assigned to the applicant. Once the application is approved, the applicant receives a list of available options from the investors based on his credit score and interest rates. The applicant can consider the options presented and select one. The applicant is responsible for paying interest on a regular basis, usually monthly, and repaying the principal amount at maturity. Number 3. Stocks. No one can predict where the stock market will go in 2021, but stock investing has always been about playing the averages. And the averages strongly favor keeping a large stock position. However, you might want to be more selective. If that sector starts to decline, it has the potential to drag the major indices down with it. Another reason to increase your cash reserves is because of this. If you're heavily invested in the S&P 500, having a large cash position will allow you to invest in emerging markets if the market falls. Number 2. Real estate. Buying a property and later selling it for a profit is traditional real estate investing, as is owning a property and collecting rent is a form of fixed income. However, there are a number of other, much less hands-on ways to invest in real estate. Real estate investment trusts, or REITs, are one popular method. These are businesses that own income-generating properties, such as shopping malls, hotels, and offices, and pay out dividends on a regular basis. In recent years, real estate crowdfunding platforms, which pool investors' money to invest in real estate projects, have grown in popularity. Investors who already have a well-diversified portfolio and want to diversify it further, or who are willing to take on more risk in order to achieve higher returns. Because real estate investments are highly illiquid, investors should avoid putting money into them that they may need access to quickly. Some REITs can be bought on the public stock market through an online stockbroker, while others are only available in private markets. Similarly, some crowdfunding platforms are only open to accredited investors, while others allow anyone to invest. The location of the property is the single most important factor that will determine the value of your property and also the rental that it can earn. Investments in real estate deliver returns in two ways: capital appreciation and rentals. However, unlike other asset classes, real estate is highly illiquid. The other big risk is with getting the necessary regulatory approvals, which has largely been addressed after coming of the real estate regulator. Number 1. Cryptocurrency. Cryptocurrency is a type of electronic-only digital currency designed to be used as a medium of exchange. It has grown in popularity over the last decade, with Bitcoin becoming the most widely used digital currency. Crypto has become a hot property in recent years, as investors have poured money into the asset, driving up prices and attracting even more traders. Bitcoin is the most widely used cryptocurrency, and its price fluctuates widely, attracting a large number of traders. For example, Bitcoin soared from under $10,000 per coin at the start of 2020 to around $30,000 at the start of 2021. After that, it quickly doubled before falling back. It is not backed by the FDIC or the money-generating power of either a government or a company, unlike the other assets listed here. Its value is solely determined by what traders are willing to pay for it. Cryptocurrency is ideal for risk-takers who are willing to risk losing all of their money in exchange for the possibility of much higher returns. It's not a good investment for risk-averse investors or those looking for a safe haven. Cryptocurrencies, especially the major ones like Bitcoin and Ethereum, are generally liquid, and you can buy and sell them at any time of day. However, the commissions on them are typically very high, in comparison to traditional investments like stocks, and you'll need to see significant growth just to break even. To reduce these costs, it's critical to find the best broker. Cryptocurrency has very significant risks, including ones that could turn any individual currency into a complete zero, such as being outlawed. Digital currencies are highly volatile and may fall, or rise, precipitously even over very short time frames, and the price depends entirely on what traders will pay. Traders also run some risk of being hacked, given some high-profile thefts in the past. And if you're investing in cryptocurrencies, you'll have to pick the winners that manage to stick around, when many could well disappear entirely. That concludes our list of the top 5 best investments of all time. What are your thoughts on our list? Please share your thoughts in the comments section below. Don't forget to click the like button. And subscribe to our YouTube channel for more videos in the future. Thank you for watching.